Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock in which we are going to take a look on the earnings report for the first quarter of fiscal year 2024 for one of the giant in the energy production sector. Chevron is the second largest company in the energy space in the United States. In yesterday's session, I took you through the quarterly report for the ExxonMobil, and in the same streak, we are going to continue with this another company, the leading company in the same sector. And as you can guess, this company's profitability, its margin, a lot depends on the outlook for the economy, for the geopolitics of the world, and this macroeconomic factor more or less affect in a similar fashion for these companies. So you would have guessed that as we saw the profitability dipping for the ExxonMobil, so is the case with the Chevron. Its price realization has dropped even though its production is higher, even its shipping is higher because the price of the crude oil has dropped. So as a result of it, its profit margin has dropped. But if you compare the production, it is on the higher side and it is expected to grow for the whole fiscal year as well. And as and when the price realization will pick up, you will see the margin getting better and the company's profitability improving in course of time. But for the most part of fiscal year 2024, we are likely to see subdued earnings. We are not really expecting much of an growth in the year-on-year numbers, and not to ask of growth even if the prior quarter's earnings are matched, that would be a huge hit, and we are still in the red when it comes to comparing the year-on-year numbers because the revenues are lower, the profits are lower on a year-on-year basis, and that is likely to remain the case for most quarters of this year. Let us now go to the press release. In the first quarter, the company made the profit of $5.5 billion, which amounts to the adjusted earnings of $5.4 billion. We have this price breakup. The upstream earnings counted to $5.239, whereas downstream earnings came in at $787 million. These are on the lower side, as you can see. In the first quarter of fiscal year 2023, there was a lot more earnings, there was higher price realization as the prices were better that time around. Now the prices have softened for the light crude oil as the people, as the world has got accustomed to the various conflicts going on in the Middle East and in the Eurasia, where the giant states, particularly operating in the energy segment, are sparring with each other, and there is this conflict in the Middle East between Israel and Palestine, which at one point in time seemed likely to spill over with Iran as well, and then there is ongoing conflict in the Russia and Ukraine. So these had impacted the pricing for the light crude oil significantly. There was elevated price level for the year 2022 and 23, but here now we are in 2024. There has been stabilization and some consolidation with slightly downward bias in the price realization for the light crude and other related energy products. So that has impacted the revenues for the energy producer companies like Chevron adversely, and we are seeing these lower revenues even though the production remains a bit, and the company is expected to continue produce more and more in the coming quarters as well. The earning per share came in at $2.97, which is around 15 to 20 percentage point lower in comparison to the first quarter of 2023, but in sequential terms, it has risen substantially. If you consider the total earnings of $2.259 in the last quarter of 2023, and then you see almost doubling, more than doubling of the net profit and the EPS. You have to then give credit to the recovery in the company's profitability, even though it is still some distance away from posting the year-on-year profit. In company's own words, it has posted a strong operational and financial performance and delivered a superior cash return to the shareholders. When it comes to the cash returns to the shareholder, not many companies can match the way energy companies work, because these are the companies who generate a lot of profit and with a lot of consistency, and as a result of that they have been quite good to the shareholders. The dividend declaration remains consistent, and also there is a share buyback which enhances the value for all the shareholders. Let us go to the consolidated statement of income. All right, here it comes. In the 3 months ended March 31st, 2024, there is total revenue of $48.7 billion, which is around 5 percentage point lower in year-on-year terms. Then if we look at the cost and other deductions, the cost is slightly lower, not much very different from the prior year's cost, but it is still slightly lower, and as a result of that, there is a difference of around $1 billion in the net income of this year and last year. The last year net income came in at $6.6 billion. Now it is down to $5.55 billion. We have already seen what are the reasons behind this decline which we are observing in the top line and the bottom line. Let us see how things are working out for the company on cash front. From the operations activity, it generated $6.8 billion of cash. The majority of money, of course, came in from the net income. Then there was positive cash flows on account of depreciation, deflation, and amortization. There was cash outflow for distribution, net foreign currency effects. There is also decrease because of the operating working capital and other operating activity. But still, the company's cash flows remain strong with the inflow of $6.8 billion. Out of that, $4 billion were used for the investment activity. Capital expenditure was the major contributor to this investment activity. The company has to spend heavily on the capex, and that took away more money, more cash this time around than a year earlier. Financing activity took away another $4.9 billion. This segment has two key listings: cash dividends and the share repurchase. So taken together, these two have contributed to this outflow. The major reason behind this outflow of US dollar 4.9 billion, because otherwise, if you consider the debt from the debt segment, the company brought in US dollar 1 billion, and then if you consider the share issued for share based compensation, that also brought in US dollar 100 million. But the company has also decided to reward its shareholders handsomely. So there was declaration of dividend that took away US dollar 3 billion, and for the cash buy stock buyback, the company spent another 3 billion. Overall, that took away US dollar 2.1 billion, and with this, the company's cash pile is down. We don't really have the exact numbers. We only have these changes with us in the cash and cash equivalent at hand. So from the beginning of the period, the cash and cash equivalent is down by US dollar 2.1 billion for the Chevron. Now it's time for us to turn our gaze to the technical side of the story. We have these share price moves of the Chevron over last few weeks. If you see, the momentum is of consolidation. It is really not moving much. It is simply trading in a range with slightly bearish bias. There has not been a big move on either side. The slight bias has been bearish, so it has been forming these lower lows and lower highs. It will be interesting to see if after finding resistance close to 155 156 range, if it is going to drop again towards 151 152. We have to keep looking for the opportunities to short it, as it is consolidating closer to the resistance zone. If it doesn't really show any bullish spurt at these elevated levels, we will have to then continue with this approach of sell on rally. I feel we have strong reasons to believe in the continuity of this slightly bearish bias. I have already enlisted you the fundamental factors behind lower profitability of the Chevron, and that is not really likely to change anytime soon. So that gives us space for us to exploit the company's consolidation on these levels with slight bearish bias. Unless anything changes on the fundamental side, we are not really expecting any significant change in the price trajectory of the Chevron. And if it continues to trade the way it has over last few weeks, I think there are going to be opportunities for us to exploit over next few sessions. So watch out for these price moves closer to these immediate resistance of around 157 158, and if there is no significant upward momentum in the Chevron over next few sessions, I would prefer shorting it with the possibility of it dipping again towards 150, if not more. If we expand our time horizon to the medium term by changing the candlestick time period to daily from hourly, we get to see this broader picture over last few months. It had rallied from around 147 148 to around 167. From there on, it has again found these resistance on the higher levels, and slowly and steadily pushed on the bearish side. And if we have to trade at this point in time, from the medium term perspective, your position is going to stay open over next few weeks. I would say that it is a difficult call, and the best thing we can do at the current juncture is to watch out for the price moves closer to the 160 price range. If it doesn't really rise much towards the immediate swing high of 167 and the price moves are constrained closer to this 160 range over next few weeks, then we have better chance of seeing the chevron continuing to decline and in course of time getting close to 145 140 over next few weeks if not more. So this is a slow moving stock. We are not really likely to see any big price move over next few weeks, but the possibility of it continuing this slightly bearish decline is quite high, and we can take advantage of the ongoing correction in the stock price of the Chevron while looking for short selling trades. Now coming to the longer term price formation. In the long term, the price recovery for the Chevron has been quite astounding. It has recovered from these sub 50 levels to almost close to 200, and from around 190 it has again gone into this consolidation phase with this decline towards 150. And if we have to consider the trade and investment over long term, I feel this is not a company's share in which you can be confident of buying and holding it for the long term at the current juncture because it is in a consolidation phase with slight bias on the bearish side. So right now it's not really the time to buy it. Maybe if it declines further and then holds close to the immediate swing low, we can think about it at the later date, but looking at the current price trajectory, I feel it is more conducive for a short sell trade than a long trade. But even shorting it at the current price level is not really going to be a prudent idea. Maybe from the long term perspective, it is more of a company where you don't really want to get involved. You simply want to keep your powder dry. Maybe better opportunity will come at a later date. So this is the sort of a company you would like to pass on for the investment and wait for the better opportunity in it, maybe at some later date or somewhere else. So that's my outlook looking at the price formation of the Chevron over short term, medium term, as well as long term. We have seen its bearish bias in the different time zones and different time frames, and in the light of that I would not really recommend any long trade at the current juncture. Maybe if we see fundamentals changing and the price formation accordingly changing as well, we can think about it at the later date, but right now it is more suitable for short selling trades in the short term and the medium term, and it's like a wait and watch trade in the long term. Now that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then, goodbye.